Hello all. Welcome to my YouTube channel, Financial Management, Mutual Funds and Share Market. Here I'm creating some informative videos related to share market. I hope you will like them. Please subscribe to my YouTube channel. Also, if you want to ask any query, then you can write an email on below mail ID. This is third chapter, investing in shares. You can watch my previous videos too. So we will begin with our today's chapter, that is investing in shares. These are some of the topics that we are going through in this chapter. Why we must invest in stocks? What is capital appreciation or capital gain? How much returns we can expect from shares? What is dividends? Advantages of investing in shares? Many of us think that should we invest in stock market? So my answer is yes, but why and how? If we invest in shares, then our capital grows quickly in two forms, that is capital appreciation and dividends. Investing in shares gives us a good and quick returns than any other forms of investments like bank savings, FDs, or investing in property, land, etc. A good companies or fundamentally strong companies can give returns up to 1000% too for a considerable longer time period of investment. In upcoming slides we will understand below two terms in details. Capital appreciation is nothing but an increase in share price. It is also called as a capital gain. And dividend is the amount distributed by the company to their shareholders from their profits. Investment in share is a liquid investment. It is easy to manage and safe. There are a lot of advantages of investing in shares. We will see in upcoming slides. So what is capital appreciation or capital gain? Increase in the price of share from your investment price. It is nothing but the capital appreciation. And vice versa, if price of share decreases from your investment price, then it is capital depreciation. Capital are nothing but your investment amount. To understand this, we will refer below example. Suppose we buy 50 shares of ABC company at a price of 100 rupees per share, and later we sold them at a price of 200 rupees per share. So our capital investment is number of share into share price. It is 5,000 rupees. As we sold them as 200 rupees per shares, then our profit is 5,000 rupees. It is double. So our capital appreciation 100%. Similarly, if we sold our shares at a below price from our investment price, then we had a capital depreciation. So the biggest risk in share investment is capital depreciation or capital loss. So it's very important that we must assess carefully the company in which we want to invest. We must choose quality stocks with strong fundamentals, good management, product or service reliabilities, financial capabilities of the company, etc. Now, this is the very general question asked by every person who wants to invest in share market. How much return we earns from investing in shares? So there is no specific returns we can mention here, because every company or every stock gives different returns depending on the company growth or value. Some companies give very good returns. Some gives normal returns, and sometimes we don't have any returns. Instead, some gives losses. To understand this in detail, we can go through a past 1 year performance for some of the stocks as below. Suppose if we invested in below stocks on the 1st of January 2020, and if we reviewed our investment in these stock after 1 year, that is on the 1st of January 2021, then we can understand the returns from each company for 1 year period. Tata Steel share price on the 1st of January 2020 was 473 rupees, and suppose if we were buy 50 quantities that time. So after 1 year, Tata Steel share prices were 645 rupees. So we can see that our capital grows 36%, or I can say our capital appreciation was 36%, which is much more than any other form of an investment. Similarly, Infosys gave whooping returns of 71%. Dr. Reddy's Laboratory gave decent 8% returns, whereas HDFC Bank gave 12% returns. Mahindra & Mahindra gave 36%, Nestle India 24%, Titan 30%. So as we saw, most of the companies gave good returns. But there are some companies who does not perform well for various reasons. So yes, bank has negative returns, or icon capital depreciation of 63%. Hence it is very necessary to understand the market risks, and everyone must do their own assessment about each company before investing in shares. Also, we have one more question in our mind. Why share prices of good companies increases regularly and until when it keeps increase? So one of the major reasons behind consistent increase in share price is inflation. As inflation rates increases, companies' product values increases and their profits and values keeps growing. Moving on to next. until now, as we see how our capital grows with capital appreciation by investing in stocks. So, investing in shares has one more benefit, that we get regular income in the form of dividends. What is dividend? It is the amount which company distributes to their shareholders from their profits regularly. It is not compulsory that every company gives dividends. Sometimes if company has a loss, then generally they skips dividends. You can see Barrett Petroleum has distributed 3 interim dividends over the last 1-year period. Dividend amount depends on face value. Suppose ABC company has a face value of rupees 10 per share and this company declared 50% dividend, that is 5 rupees per share. So if I'm having 100 shares of ABC company, then I will get 500 rupees in the form of dividend and it is directly credited into our bank accounts. So for last 1 year BPCL has gave almost 37.5 rupees per share in the form of dividend. Many people asks that investing in shares is a gambling. So it is not a gambling. If you just invest in any company without any prior study about company's fundamentals, then you are taking risks of losing your capital. But if you do proper assessment of company's fundamentals, future aspects, etc., then you will have a minimal and limited risk of capital loss. Investing in shares is liquid investment. If you invest in shares and after selling your shares, your capital will be readily available in cash form. So you can easily withdraw in your bank account and use as per your requirement. But in other forms of investment like property, we cannot easily buy and sell. Investing in quality company for longer time period ensures safety of our capital. Also, diversified portfolio helps us to keep our capital safe from short-term financial crisis in share market. So we are concluding with the advantages of investing in share market. We have a good and quick returns. We get returns in 2 forms, that is capital appreciation and dividend. Investing in quality stocks ensures safety of our capital. Buying and selling of shares is very easy. It is a liquid investment and readily available in cash form. And everyone can invest in shares with small amount. These are some of the motivational quotes from Warren Buffett. Warren Buffett is known as the most successful investors of all time. You don't need to be rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with 130 IQ second one. The stock market is a device for transferring money from the impatient to the patient, and most important, never depend on single income. Make investment to create a second source. Thank you for watching video. Please like and subscribe. I will come up with many more informative videos. Until then, bye bye.